All right, hey, how's it going, guys? Welcome back to the portal material. So we've begun to discuss a little bit about the importance of averages, how we're actually using them, and you're getting to see firsthand the examples behind them. And funny enough, since the last time I recorded versus what I'm recording now, you can see how that exact same move that we discussed literally in the last portal video has begun to play out, right? This is that same momentum MB being created. That momentum MB is being created after a powerful move that started to slope the averages higher. The slope of the averages moving higher meant that new money is coming in, or big money is coming in a big way. And as new selling comes in, the selling is unable to push and create new supply down. And hence it accumulates or reaccumulates across our lower time frames. This is the EVC. And it begins to go sideways on our validation or our context time frame, looking at the momentum cycle. This is the momentum cycle of momentum MBs that are created, in this case, with the usage of the averages, and price gets bought up and new money comes in at the rising 5, 10, and 20 in anticipation of another momentum MB validation and move higher. And as a result, that should, and oftentimes does, create lower time frame MB accumulations through a flush. So we had a flush, we start creating MB accumulations, however you want to view these. And within MB accumulations, because we're looking at the EVC, if we're looking to trade this on a lower time frame, we know that the MBs following, or that are happening a little bit higher than the averages, begin to be also classified as momentum MBs. So these momentum MBs that form right here act as potential lower time frame accumulation MBs or double MBs and opportunities. And as a result, you got to see exactly this trade from the last portal material where I personally took it. And now, I mean, as you guys can now see, this thing has gone absolutely insane. And I've had, well, one of my best trades of the year so far, based on how this goes. You know, this has total been up around 34 risk to reward, or 34 times the risk I put on, which is insane. And as a lot of you might have noticed, a lot of this portal material is focused on teaching through examples, and most importantly, teaching through live things that are happening, so you can see exactly how the portal material you've learned so far interacts directly with the live market in real time. And what's even better is that you get to see this every single week, every single Sunday in the webinars. So even if by the time you're watching this, it's 2025, 2026, or 10 years from now, you can show up to the next webinar, show up to the next report that I might put out if I'm doing that or something like that in the future, and see exactly how the concepts that are being taught right now are still utilized in live market conditions and applied over and over and over again. Okay, so going back to moving averages, right? We now understand that there is a formula to what the moving averages represent and what they do. Now, something important to remember, because we're going to talk about this, is that moving averages serve a different purpose based on, of course, the time frame that we're on. If we're looking at the V or the C, and we're looking at the momentum cycles of a V or C or higher time frame in reference to an entry time frame, we're looking for that momentum. We're looking for prices to slope higher. We're looking for price to prove that it's moving higher, to prove that there is money demanding the asset to go higher. The slope of it is showing us that it might sustain the move. The inability to sell off and instead get bought back up at those rising averages is proof that money continues to come in and wants to keep going. And as a result, since that's indication that money's coming in, we use that to build up the understanding of where the momentum cycle of the VNC is going to take us next, which comes into the overall picture that we've already discussed, which is knowing what the composite operator likely wants to do next based on our timeframes of entry and potential opportunity. Now, let's continue with this now, because you've kind of seen example, you've got explanation plus example. Now we can continue with this and look at more example. So very simply, again, big money, the composite operator wants to further continue buying in at or above, which is something that you've already heard before, the averages. So the instant easy way to think about this is if you think back to some of the initial accumulation MB versus momentum MB comparisons and differences and all that fun stuff like this, right? You begin to remember how these characteristics are now forming together, where the momentum MBs, right, tend to occur above or on the 10 and 20. So this is on the rising 10 and 20. And these accumulation MBs, as we remember, right, occur off of the higher timeframes, validation timeframe, 5, 10, and 20, which is exactly what you're seeing me talk about and use right now, which is exactly what you saw from this trade here. So even though it's executed on this timeframe, the actual move came from an understanding of what this higher time frame was doing, which is that we are creating clear and good momentum MBs above the rising 5, 10, and 20, which means that we know that as these accumulation MBs begin to get created inside of there, it's happening off the higher time frames, 5, 10, and 20. So it's giving us a map to where it makes sense to watch the actual price, okay? And then as we go inside of it, of course, you have the actual opportunities within the MAs. So we have to remember that MAs serve a different purpose based on what time frame we're looking at them on. But at the moment, let's forget that and continue thinking about the VNC. So big money, the composite operators want to buy in at or above the averages. That's what you saw in all these examples that I already showed you and will show you in other trades that I've taken in any market that I'm watching, in any market that I mark up, and more than that, right? But ultimately, big money, if you're a big money holder, let's say you got into big accumulate. So think about yourself as in the form of a bank, right? And I want you to do this really quickly or not a bank, like a big fund, a very large fund that has tons and tons of money, like billions, if not trillions. And you're allocating a few billions or trillions to the actual market that you're trading, billions, millions, whatever it might be, hundreds of millions. Ultimately, what's happening is as a fund, because you have a lot more information and you can't really trade just a simpler pattern or a small area and just enter like once and then hold, which is what we do. You are basically starting. So count each one of these green lines as the initial buys or as buy orders on behalf of a very big institution, because I want to show you why we operate the way we do and how we think and why this works so well. Ultimately, when you have a market that's going into a flush or a major flush as part of, let's say, a major cycle, right? We know that could be for the purpose of accumulation, but we don't know as traders if it's going to accumulate like this did and then start a move, or if it's just going to keep distributing. Which means that this is always going to be hindsight and after the fact. But we don't care about that because we're not interested in trading this area here, right? But what's happening and what actually happens is that large money starts buying and putting in buy orders throughout all of this, right? Large money buys, it starts coming down. Maybe they buy more, they buy more, they buy more. So they buy a ton. They buy a ton of positions, right? These are all potentially, right, 100 million, like maybe like $20 million positions, right? That's how I want you to think about this. 20 mil, right? So each one of these like green lines can represent a 20 mil, 30 mil based position, and they accumulate a lot of the asset. They buy up a lot of the asset in these moments where we don't actually know as traders if it's going to be bullish or bearish or anything like that. But the buying is happening. And as a result, we now know the buying was happening due to this move. But notice how just because I'm aware that now the buying's happening here, I'm not specifically executing it. Instead, I'm waiting, right? And then what happens is as price basically proves itself and comes out of some stage one. So what you'll see is I have this gray little line right here, and we're going to talk about labeling and drawing in lines, but I have this gray little line right here. And as you might recall, a line, right, over like, let's say some kind of high or over some point can act as a MB of some time frame. So ultimately what I'm doing is like put it together is I'm looking at a stage one, so kind of this sideways action, and I'm looking at an MB that might align with price moving above the initial averages. And as price does that, you can see I start labeling where the accumulation MB exists because I assume this initial push is the accumulation MB since it's coming out of a stage one. So the concept that you've already learned. So now we're putting a few concepts together. And then as it goes sideways on rising sloping averages with failing to sell down heavily, right? So that means buyers are still stepping in. What this represents is that the composite operator, whether you're a big fund that's putting in 20 mil a piece every time you're getting in, or anyone else, or another institution, or multiple institutions, it doesn't matter, right? The composite operator is what we refer to. It means that the composite operator is now getting in and protecting all the older positions and getting in large. And as a result, what you see is you see the initial momentum that begins to come in. Now, if you're one of these funds and you're now accumulating out of a stage one, so let's assume this is a stage one because it's also an MB, what does that mean for you? Well, that means in the event that you're going to be a participant of this market and you're going to continue to make money and your positions, your prior positions are going to grow in value, what does that mean? Well, that means that you as a fund or as a composite operator are going to protect your bottom line, which is exactly where the idea of demand validation comes from. So what's actually happening is as this goes higher, prices don't want to come back. Momentum comes into the market, and there is now a change in the kind of delivery that the market was experiencing. This is your initial understanding of there's a demand for price to go higher. Money is entering on a level it wasn't before. So all of these orders within this stage one that was kind of going sideways, that's now created accumulation MBs from out of the fucking depths, right? Now that it's created those and momentum is now in the market, the next pullbacks that occur to averages are huge points of either small profit taking on behalf of the institution. So they might be taking profits off of some of this, right? But most importantly, if the move is not complete, which we get to see by the way the momentum MBs form in this case, right? So very clear, doesn't sell off heavily, comes and gets bought up on the rising averages. Well, that's an indication that what's happening is further positions are being added, and anytime price pushes lower, more positions are being added, and you get a move. This is exactly how you want to think about it from a visual cue perspective, right? Move. 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 And now, exactly as per why I traded, we assume the accumulation is happening because of the way the momentum MB is being formed and where we are in the overall cycle across an EVC or multiple EVCC or multiple time frame analysis. And we allow that to act as a springboard for a potential trade to take risk on, because we assume that the composite operator is still continuing to step into this and is still playing out the full cycle until we get to the fourth momentum MB, which is what we're at right now, which just could be an extension, right? Or until immense failure, ultimately, right? And then we can fail, and then great, the move is done, and we can go through a new reaccumulation or whatever. So that's the way that we consider what's actually happening in the market, and why we basically use the averages to show us that momentum cycle, right? Now, let me go back to this thing for a second. So very simply, big money wants to buy in at or above the averages to protect their prices. This is protecting their prior orders, and very keyword, and to get a price worth buying at, right? So again, an institution might not want to buy in very high areas like this, but the small chance that selling begins to come in and some people end up selling, that is the chance, if something is very strong and you want to own it, for you to get back in. You're not going to be someone that waits for price to break down and come down much deeper and then buy new, because that's not how markets operate. If momentum is in the market, if money is coming into the market and your prior accumulations are set in stone, that's where the move comes from. And these are the moves that I want to be a part of, right? I want to be part of those momentum cycles that I can now use to get myself involved. So yeah. Now, failure of the averages, very important. When we fail an average, so if the averages are going up and then, maybe we don't get caught on the 5, the 10, or the 20, we kind of start failing down. It's an inability, right? Think about what that means. If we fail the averages that are on average moving upwards, which means that the average price of this is continuing to increase and the demand of it is continuing to increase and the slope of it continues to increase, and we're unable to get below it, that's good. But if we start getting below it, if we break down below it, what is that? Well, that's an inability to uphold the orders that were present, right? If we start breaking down beyond those averages, that's an inability to uphold the prior buying orders and the prior demand validation. So that's a sign. That could be the sign that starts either a full directional change, that starts maybe a reaccumulation, right? Or basically fails into oblivion. But basically, if we get rid of failure, it's basically the grounds for a directional change, in which case you might just step away, or for a reaccumulation. And this is where we kind of bring back the idea of the fact that sometimes, right, as prices, let me think about this in terms of something I traded recently. Maybe Tesla. Sure, right? So then as prices begin to fail down, so this is a major failure, right? This is a failure down. It's an inability to uphold the averages and it fails down. That could be for the purpose of starting a bearish market or to reaccumulate. Now, due to the context, the overall story of this market that's currently being had, where we move higher, and you think back to the very initial parts of this course when we kind of break down, an idea of breaking down to then reaccumulate is literally the grounds for a reaccumulation. So when we lose averages, for instance, but we have an EVC or EVCC, and we have multiple ways to look at it, right? then that could be grounds for waiting for the reaccumulation. And this is why sometimes I'll trade something through a cycle. It might start breaking down, and I simply take a step back entirely. Let me show you an actual real example of that for something that's happening live currently that I personally shared with the team as well. So gold is a great example of exactly this, and I'll show you why. So currently on gold, let me go to the weekly for you guys. Let me open this. Let me go down here. Okay, we're looking good. Maybe there's a better way I can find a gold one that I labeled. Gold, something like this. GC, just looked up future. I know I have it labeled somewhere. Okay, perfect. So if we look at gold here and we start with the weekly. So again, this would be assuming, again, let me walk you through it. If we have an EVCC, which is basically what I'm doing, and I'm using an entry, let's say of a 2 hour, a validation of a day. Oh, no, sorry. An entry of maybe like a 30-minute or 1 hour. A validation, which would probably be around like 4 hours. A C, which could be the daily, and a C again, which could be the weekly. So assuming this is the EVCC I'm working with, and I work through this, right, what do I actually see, and how would I go about trading this? And why am I bringing up this exact example in reference to this specific rule, which is that when we fail averages, it could just be simply a reaccumulation. How does that pertain to the thing you learned before, based on the fact that we sometimes break down, and it might look like structure broke down, right? It broke down below an anticipation higher low, but it acts as a springboard for reaccumulation. Well, this is how right here. If I apply my weekly labels to what's going on here, and you can see I left a little note too, and I will start sending out better notes and analysis like this so people can actually see what we're thinking and thinking about. But think back to the beginning of this thing. It began its accumulation MB, so it started to break above, in this case, let me give you all the terminology we can use. It started to break above a clear area that could be labeled as a stage 1, as it first started to gain ground above the averages that validated accumulation, that created an accumulation MB. That MB, whether you look at it like this, like this, like this, or like this, and I'm kind of looking at this large one right here ultimately, right? But I'm doing so by looking at the overall price action here. When you're looking at this and it breaks beyond that and it starts validating a potential MB, that's where I label an accumulation MB. Now we're going to talk about labeling too, and you're going to get good at labeling because you're going to get good at seeing this over and over and over again. You're going to see it in the webinars. You're going to see it everywhere. But that's an accumulation MB now in the market, which means the next step is potentially the creation of momentum MBs. And what happens? This is a weekly chart. Remember that. This is a market that me and the team traded since these points here and took higher because this is what we expected out of a move that was proving to be bullish, right? So what happened is price had broken down, created that accumulation MB out of there, and went into a momentum MB1, kind of, this was all maybe a momentum MB1 because it all happened around the same price, but basically momentum MB1 that then moved higher, again, paused. The selling was not large. It wasn't pronounced. Instead, it sold off to a rising 5, 10, 20, sold off, moved higher. As it started a potential momentum MB3, it came down, paused on the rising 5, rising 10, rising 20, started a potential move, continued to fail back down a bit, right? Still pausing on the rising 20, the sideways 10, maybe a down moving 5, but again, that's okay because we have 3 averages to give us the potential of where money can come in, because we're never 100% certain where the big money is going to buy in, because the market is not just a super, super simple to define area that people always come in, because that's not how it works. The way orders enter the market is going to be a little bit different every time. Think snowflake, think what you've learned before already. So again, this is why sometimes it's the 5, the 10, the 20, but we have an overall basis for that because of how the move occurs, right? Starts moving higher. This all still acts as kind of a momentum MB3. It's all happening around the same area. If you look at this gray line on the Mentifex structure indicator, like since it's happening basically right there kind of on it, I'm just treating all of this area here, kind of this high and anything around that, and the inability to move higher as the same momentum MB. So that's a rule that you can write down and start to use in your labeling, because you can see like I use this as a momentum MB1, but I also still counted this as a momentum MB1 because of where it was. If you consider this high, it's kind of in reference to this range, Mentifex range high right here, and you can see these kind of interact with each other. The orders that have come in here are the same orders that are coming in here. Then the orders that are coming in here might be a little different because at that point, this high and this high are very far separated, which is an important note because this can help you define what part of the cycle you might be in. These are the initial elements of defining what cycle you're in. Now, We move higher. This counts as a momentum MB3, multiple pauses. But again, as it pauses after making a move up, where does it find itself? And again, you can see why I have these lines and I draw them like that, as you saw before. But it finds itself on the 5, the rising 10, the rising 20, and it moves higher. And it moves higher. And you can see I kind of counted this as a potential MMMB3, but I also could have made it MMMB4. This is preference. And that moves higher. And then it pauses and it moves higher. And now we are breaking down extremely heavily beyond all of these points, which actually, as you can see my label here, is a potential distribution MB. I think this is acting as a distribution. Now, what's interesting, though, is as its distribution, as the potential averages are failing or as price is coming down, I'm not treating it as something where I want to get short, which is important, right? I'm still treating it as a potential reaccumulation because of where we are. So as I step down to like a daily, right, this is a great example because on a daily, if I put on the labels of the daily now, we have the same thing, but on a fractal basis, right? We have that distribution down. That distribution down starts creating the momentum MBs now, and it's creating multiple momentum MBs that you can use as a springboard to start going short if you really wanted to. But again, I like to see very, very full alignment. So like if I wanted to get short on this, I would probably wait for, honestly, it actually is potentially moving into a nice short market soon. And it could be shorted. But this is that example of like here where the averages are completely failing. And due to the weekly move, there might be actually a reason to start looking short. But in the event that you had, you know what, let me show you another example. So, we'll ignore that just for a second because I want to show you an exact example of what I mean, which is something like this. Okay, this is perfect. This is actually very perfect, right? Something like this here, where the weekly kind of breaks down into a very normal momentum MB, but the daily, if I go to the daily within that momentum MB, what you can see, there we go, this is perfect example. What you can see here is we have a full breakdown. We have a breakdown of the distributions, right? So maybe something like this, that's a distribution MB. We start putting in momentum MBs to the downside, but during this time, I wasn't personally looking to take this thing short. And I wasn't looking at it as an overall directional change. Instead, I was viewing the entire market there as a reaccumulation due to the cycle of the EVCC, because I am marrying multiple timeframes together to show me how the orders are entering the market for the purpose of deciding if risk is worth to be taken on something that is still either delivering or not. Okay. So when we look at this and this started breaking down and making a distribution, boom. So that's the blues over there. But very simply, if I was to draw it, to make it very simple, you kind of have this FMB area here. And probably, here when this black candle right here broke this down, that is your initial big sign of, hey, I'm in distribution. So again, this is an example of how I might label something, but we'll talk about labels soon too. And I'll show you plenty of examples like this of how I label and orient myself in a market. And then as it breaks down and pauses, in this case on the almost lower moving averages. This is a little bit of a weird pause, but this still now in the after effect. So again, in hindsight now, we know this is acting as a momentum MB1 of the downside. But notice how when this is happening, I'm not using this as a excuse to potentially go short or as an excuse to assume that it's going short. Instead, I allow the EVCC to demonstrate what's going on, which means that when I start on my weekly, which is what my system looks at, right, I'm still looking at this and thinking, hey, this is representative of money had come in. We started momentum MBs initially here. This was only momentum MB1, all around the same range right here that's being created by the Mentafex premium structure. That's probably MMB1. Price just moves higher and never pauses, and now it's pausing again. So what we know is this is acting as MMB2, which means that the underlying story of this is that orders are being bought up at the rising averages and price wants to move higher. So even though the daily now, right, is breaking down and losing the moving averages, clearly, I assume instantly this is for the purpose of reaccumulation. So when price breaks down, even though it's down here, and now this thing right here can become a momentum MB again, right? And maybe it wants to go sideways like this and then break down. I'm already thinking, how can this become accumulation? And very simply, now if I relabel and get rid of that, if I draw a high here, kind of through this area, so I'm looking at this right here as an MB. I'm just looking at where some of the price action was trapped in or around the averages, right? So again, what I'm thinking is, where is the accumulation MB potentially being created in reference to the averages of a full cycle? So we know that acts as now an accumulation MB. Let me label that for you. Kind of that area there is an accumulation MB. And as price moves higher and slopes the averages higher, and then the first bit of selling comes in, Again, this is a little bit harder because it kind of comes under the averages here. It's the initial move. This kind of right here acts as an accumulation MB or as a momentum MB. Both are completely valid based on the portal material we've already seen before as well. Accumulation MB, this is like an MMB1 or an accumulation MB, right? So it doesn't matter because they are used as a validation cycle anyway. So remember, unless we're using this area to enter, unless we're using this MB here to enter a position fully, then it can qualify as momentum MB because we're stepping down inside of it to actually trade it. So this can be a momentum MB one or an accumulation MB. Both are fully valid. And then you have the creation of this momentum MB2, right? After price pauses, moves higher, the averages now start to follow. And actually, just so all of you know, a personal trade that I took was inside of here or here. And I think you've seen a number of those examples in this portal because, well, the portal that's being created right now is using the exact concepts I'm using on the exact markets I've traded. So that's why you're seeing this, right? And then you can kind of see like this one, this little high here, this gray high and this gray high are really close. So you could have labeled this momentum MB1 and this momentum MB1, basically dropping it like that. But because this high right here is also very close to this high, then this could be the same momentum MB as this one, but this one can't be the same as this one, right? So this one here, let me draw circles. This one can be the same as this one, but this and this one can be the same as this one, but this one cannot be the same as this one in purple, right? So very simply, we know that we can either group these or these into a momentum MB. And the reason we do this is because we want to get the best possible idea of what momentum MB we're in so that we can decide if it's worth to keep following a given market. It's very important because for me personally, I don't really want to follow a market beyond the fourth momentum MB because oftentimes through the cycle of delivery, the fourth momentum MB puts in the last possible straw and then there's a breakdown. So for instance, on MSTR here, one of my best trades now of this year, likely based on how this delivers, I may close full tomorrow due to this move, and I'll show you why. When we start this move out of here, and we go through momentum MB1, momentum MB2, and this is in line with this one, so I'm counting this all as 2, or you can make this momentum MB2, and this could still be part of 1 due to the fact that this range is working in tandem with this range in terms of where the new supply is coming in, and these are very close. So again, both are valid. This is up to you how you label it. I just labeled this one MMB2 and counted this whole thing here as the MMB2, right? So MMB1, momentum MB2, momentum MB3, and the fourth momentum MB is happening now in what I suppose to be true, which means that this is probably the last move. Yes, it might go one more candle, but what this means is that tomorrow, as price literally opens up, right, I want to move my stop up here very, very quickly as it opens because either it then starts to move higher and maybe I can make some more money and then close the rest maybe somewhere here with a trail, or I just get stopped out here and I assume that this is now going to break down because we've delivered the momentum cycle. This is why it's important to categorize where you are, to label where you are, and to consider the momentum MBs that you're currently in or which ones might align, right? That's what's happening there. So if I go back to NVIDIA, right, as we went here, this is why I characterized through the color coordination here, the MMB1 or MMB2. So let's get rid of all that. Let's go all the way back here. Get rid of all those colors because again, this is my actual chart markup. I don't want to get it filled with too much shit right now. Okay, and we'll get rid of these. Right, so you have that MMB1 or accumulation MB, MMB1, same thing as this one. So it depends on how you want to label this because, again, this whole thing here can act as the accumulation MB, and this could be the line you kind of define as your initial stage 1 move out of that area. This is where, again, Composite operator accumulated large positions, and now the momentum is coming in, and they want to protect those positions at the rising averages, just like we spoke about, and those rising averages are creating the conditions for further momentum MBs. And then you have your MMB2, and then you have your MMB3, and now we know this was the MMB4, right? And then that comes up here and creates the breakdown that's, quite large, and then you get the very big breakdown. But once again, right, funny enough, this large breakdown, as it begins to break down, doesn't act as a directional change, even though it's breaking all the lows because of the concept we discussed before. And that is simply that, right? So if we want to go back to the beginning principles that we taught, the understanding that breakdowns below certain lows in this kind of case is not the signal for a market to be bearish. Instead, in many cases, as we see now, it is a reference to potential reaccumulation. And we use that to springboard through EVCC and through the cycles of EVCC, whether or not we're going to now trade something, wait for something, stay out of something, or completely ignore it, right? Whatever it might be. That's how we make our decisions. That's where decisions are made from. This is what it means to be a trader. And then, so yeah, we start this beautiful move. And yeah, now we're somewhere up here. Now, again, I'm not trading this thing because it was pretty shit. But this is that same example where big money is going to protect their orders at or above these averages. The failure of the averages doesn't necessarily mean that we're completely changing the direction, everything's fucked, right? It just simply means that, hey, the big money is not protecting this like it was protecting before. There is no insane demanding the price to go higher or participants demanding the price to go higher. Instead, it's one of those markets where new accumulation, new composite operators might want to come in, take their time to accumulate, and then start a new move that you and me can take advantage of, because we are traders that can take advantage of edges in the market and of clean trades without having to necessarily sit there and buy hundreds of millions of dollars worth of stock through multiple channels, through a boss that's like, buy this shit, figure out how to buy it. You know, we're not doing that. We are traders. That's what a trader does. If you operate with a fund or a huge institution or something, it's a different story. But this is what we do as traders. So very simply, failure of the averages is the inability to uphold the orders that were present. And when that fails, which we've now seen a few examples of, that could be the grounds for a directional change, which might happen, or reaccumulation. And what we do is we put this together with our other EVCCs, with the overall picture of the market, the story of the market, to decide, is it worth continuing to watch, or is this thing gone and useless now? That's where it all comes from. Okay. And those are like some direct examples of that. Now, again, when you're looking at this, I assume you're very likely confused with some of the labels. Well, maybe not, because honestly, as you look at this, you should be able to see the exact same things you've already learned in the course, just labeled, honestly, right? Accumulation MBs after the flushes, which actually, and then as they come out, that's the accumulation MB, which creates momentum MBs across those rising averages. And the rising averages work so well because of the things we've already discussed, big money coming in, participants want demand to go higher. The pauses that happen don't sell off. Distribution doesn't happen. Instead, it gets bought up. And those are opportunities on those lowers to get positioned. And as a result, you get beautiful, beautiful opportunities like this one and this one and this one and this one and this one, right? Each one of these opportunities can be multiple 6-figure, 7-figure, 8-figure based on who you are, trades, 5-figure, 4-figure, 3-figure based on who you are and what your account size is. Each one of these can act as an opportunity like that. And the better you get at spotting these opportunities on good markets, which is a very big key point, which is why you have access in this mentorship, in this community, to a tool and a screener that helps you screen for markets that might be good. These are the opportunities that are presented over and over and over again. And our goal is to spot them, define them, where are we, and take on risk in the event that it meets our conditions. And how do we take on risk? Well, we do so through the material. We do so by allowing the market to do what it normally does, to let it break down while it's in accumulation, maybe even meet like the overall rules, however you want to consider this accumulation, or overall restart of a move. And as we go inside of it, that might be the breakdown that leads into new accumulation MBs, that leads into double MB setups, which could lead into momentum MB setups, like the initial one, because that's another way to trade. And that leads to the delivery. So let me actually add on the extended hours here. There we are. And that leads into the delivery you see here. Momentum MB1. This is probably 1 because of where it was, right? So take the last gray high from the indicator and this one. So these are kind of both MMB1. This one and this one are probably MMB2. So now what I'm looking for is that tomorrow this is going to be MMB3. It might make a move, MMB4. And if this happens, I'll close my entire position right here. Right? If a move starts coming up, maybe I'll move a stop like here and let this thing come out. And hopefully we get this, right? So again, I find a way to basically milk the most out of the market I'm on by allowing myself to understand what cycle we're in, where in the move we're in, and by, of course, labeling those cycles and then trading the clearest opportunities that meet the conditions that I personally am looking for. That's what it means to trade. That was a long video. You might have to rewatch this. There was a ton in here. But we're going to continue looking at examples. We're going to continue breaking down moving averages, looking at them, understanding them more, looking at real examples of stuff that I'm personally taking or have traded or have analyzed or have helped the team take or the team has taken. And I just want to remind you that this is not something like randomized and something new and I'm like just doing some random shit, right? We have members that literally spot and see the same things. And based on the time frames they trade their moves because again, we already know how fractals work. We know how fractals work. This is how opportunities are created in the market. And all we're using is our understanding of accumulation MBs, momentum MBs within two different cycles or within two cycles that we are considering. And now you have an understanding of how averages play into all of that. And I'll see you in the next one and we'll keep going.